What's up guys, hope you're all doing well today. Welcome back to the channel, Mark's Stock Review. Today's video is going to be on Geely Automobile Holdings. I'm going to go over a brief overview of the company, the reasons why the share price has been rising lately, and a summary of the pros and cons. And if you're new to this channel, I keep my videos as brief as possible and to the point to respect your time. So if you would consider subscribing if you find the video helpful, that'd be great, I'd appreciate it. That said, let's get right into it. Geely is an investment company that operates as an automobile manufacturer that focuses on development, manufacturing, and sales of passenger vehicles. Being based out of China, they have 12 plants, 5 global R&D centers, and 5 global design studios. So they are not a startup EV company. They're actually huge, and they've been around since 1997 with approximately 52,000 employees and a $29 billion market cap. Some of their notable subsidiaries are Volvo, Polestar, and Lynk company. Most of their sales are in China, but they are in the process of expanding globally with a focus on new energy vehicles and EVs. Let's take a quick look at the sales trends because that's going to give us an idea of where Geely is headed in the EV market. Number one, we have total sales volume for the entire Geely group is up 8% year over year from October and up 11% since September. And number two, of the total volume, only 5,826 units were new energy electric vehicles. So it's still a very small percentage, which may contribute to the fact you only see 8% year over year. Number three, we have global expansion. Export volume of the total group was up more than double to 10,531 units as compared to the total sales volume in China being up only 2% year over year. And so from these numbers, it's clear to me that Geely is getting into the EV market, albeit slowly, and they have a focus on global expansion. Next, I'm going to go over why Geely Automotive has pretty much been on fire since late October, early November. Reason number one is that reportedly, Geely plans to produce 300,000 premium Polestar EVs each year at a new China plant. It's going to run as a new, fully owned subsidiary with plans to include a more sporty and larger EV SUV in the future. Plus, they already have showrooms existing in 9 countries. So why is this important? It's showing that Geely, with their existing capital, is laying out the necessary infrastructure with their already existing network to aggressively get into the EV market. Some of the highlights for the Polestar 2 is 0 to 62 in 4.7 seconds, a torque of 487, and a range of 233 miles. I even found an article that compared the Polestar 2 to the Tesla Model 3, and actually the Polestar 2 did beat out the Tesla Model 3 in a few areas, including better steering, feel, braking, better inside seating materials, and the designs inside, including the controls and touchscreens. It is important to note that the review does not carry a whole lot of weight, plus they did say the Tesla car is better, but it is important for one reason. And the reason is they don't have to be better or even as good as the Tesla. What's important in my opinion is that they are competitive, and they also have the Volvo Geely family as support for continued improvements as well as the infrastructure and marketing. Some further pros and cons of the Polestar 2 is right here if you want to pause the video and take a look. Advanced talks of a Polestar IPO is the second reason why investors are getting excited about Geely. There's talks of raising $800 to $900 million in their first external funding. That's going to help expand production and increase the speed of Geely getting into the EV market. And the third reason that investors are getting excited about Geely is the Lynk company Zero Concept, which is scheduled as their preliminary new product for 2021 launch. This is going to be a joint venture between Geely and Volvo to quote-unquote meet the needs and requirements of new generation of globally connected consumers. So what exactly is this concept? Well, it's a membership club that provides an experience rather than vehicle ownership. So it's basically the next step from a subscription model. Benefits of the program include access to as much of the vehicle as needed and the ability to share with friends and family. access to the club, meaning drinks, entertainment, browsing products, and events. And you can see here from the pictures of the club that the experience is more of a club and social event rather than the vehicle, which is displayed at the back of the club. So it's not the center of attention. So from my point of view, the GELY Group really does have cool things to be excited for in 2021. Some pros for GELY: they're vertically integrated, they have existing manufacturing plants and marketing infrastructure with the ability to scale. They're going to have easier and less costly access to capital being a larger company, and they're demonstrating that they're aggressively getting into the EV market. To be fair, some cons. Number one, re-equipping their manufacturing plants for EVs will take time and money, and switching business models can be inefficient. And next, unaudited reports from a China-based company and the general risks associated with a company that trades in the OTC markets. That does it for my video on GELY. Let me know if you have any questions about this company in the comment section below. If you found it helpful, please consider subscribing and hitting the like and notifications. I'd really appreciate it. Hope you guys have a great rest of your day, and I'll be talking to you soon. Take care.